Good afternoon, everyone, and happy Friday. Welcome to the weekend edition of Trading Trends ETF style. What a week it's been. Let's get right into it. Hope everyone has a wonderful weekend. Here we go. Today, very interesting charts. Today, we'll take a look at the most important ones of the day, the week, end of the year, since it's our Friday wrap-up show. Very interesting intraday action on the SPYs. We'll take a look. It started very bearish this morning. We bottomed in the afternoon, and then a very nice resurgence. You know, they say markets don't bottom on a Friday. We'll see what happens. I still think we have another week of bearishness, but we'll see it in the charts ahead. But today, as you can see here, a big day out of energy, staples, and utilities, totally defensive, not a typical offensive leadership that you would expect, but it is rotation. And this week characterized by approximately 12% losers, big heavy losers in uranium, a winner up till this point for the year, profit taking, not a bubble bursting. Ethereum, profitable till this year. Up until this point, not a bubble bursting, but profit taking, in my opinion. And Ark, we've been saying it's the GOAT, and absolutely normal for some profit taking to be held here. I hope you're getting your pencils out. And just a little bit of a note here, I got much more active this week. I bought a silver call spread. I think the metals trade is getting ready to go in. I bought the December 44.48 call spread. And also looking very closely at Ethereum. I also sold some put spreads on IWM and sold some call spreads on USO. I think oil is trading a lot worse than the energy complex. We'll take a look at the XLA. So without further ado, let us get into it here. Let me go max screen. And it's been quite the day. Let's get into it. All right. Screen share. All right, moves first in terms of stocks. It's been a crazy day with the recovery. We'll get to the V-shape in a microcosm that was the market action today. But Tesla lower by 4%. Palantir actually ended up 1.5%. It was a volatile day for that name, in addition to many stocks today. AMD down 2%. It was off far more than that. The semis were getting destroyed earlier this morning. Google down 2%. Broadcom down 2%. Robinhood, an amazing reversal to close up 2.5%, and Oracle down 2%. As I close out of that window here, so take a look at the intraday action. Here is the opening bell. It was really a sell the market till about noon Eastern time, and that's where we hit an oversold low here. SPY represented by a price of $661. I'll zoom out after, and you'll remember what we were talking about, the levels. But notice these red bars here. What we're talking about fractally in terms of trading, you want to see the enthusiasm, get done essentially, right? So here you see the lows here. We got to a 20 RSI. You see the moving averages all going lower here. The bottom came at noon, as I said, at 661, and then really a nice surge here at 1 o'clock to go above VWAP. And then I knew we were probably, because SPY is one of the best trolls of all time, we knew we were, as soon as that VWAP started to go higher, I knew we were going to try to be magnetized, not quite at that 200 bar moving average, each one constituting 30 minutes, but I thought we'd get at least to the top Bollinger Band, and that's exactly what happened. At 4 p.m., VWAP on the day was 666. The sign of the beast, and we ended up closing just nearly 1% above that to essentially close flat. We'll get into the internals. There was actually no multiple standard deviation loser on the day. To me, this screams rotation. Every squirrel gets a nut. As I zoom out here on SPY, we have, I'll go back to last week in the videos, because we're still staying with our tune. We had let me get here on my notes. We had a bullish accumulation phase ending right around Halloween. I have for my mark here the 31st, even though the all-time high came on the 29th. Still saw some nice action there. Or if you want to just scrap it clean, you do it from the 29th, great. But it's going to get a little bit sloppy in terms of the 15 to 18-day cycle. Like what I saw, to be frank, we said that you're going to have a 2-week process, or 2-week digestion of these gains coming off the all-time high, and you got a bearish divergence there, not even scratching 70 RSI. I said look out below as soon as that happened, and that's exactly what happened. Look at this doji today. This reminds me of bullish action we had before. This is a very bullish looking candle. to touch 661 on the day and to have view up at 668 and close above that is pretty impressive. You could see the buyer stepped in. We touched the 50-day moving average for the first time since April. Everyone's saying the sky was falling. You heard it here first last week. That's exactly what people said was going to happen. And look, we're still holding. Yes, we're at 49.5 RSI, but still overall a very healthy trend. Like I said, I'm still anticipating another week of bearishness. It was great action today. I really didn't expect that kind of strength. I thought they were going to, sell Mortimer, sell, but I still anticipate about a week or so, ending in around next Friday, so a week from today, and that will end your bearish distribution phase. And I think we're getting ready for a zooming rally towards 7,000 SPX in the coming week. So as I said here, to just fill this out here, if things get really ugly over the next week, you're going to get to about 650 in SPY. And as I said, that's 20 points from here. Folks will think, oh my God, the AI spend and everything is absolutely overdone. I don't think that's the case. This looks to me classic profit taking, not bubble bursting behavior. And to look at it when we're looking at the alpha generation that comes from the leaders versus the losers. But overall, as I said, another week of bearishness. I expect us to hang in right around 674, which is our 21-day exponential moving average. And like I said, to the downside, a little bit more volatility pickup. We'll take a look at the VXX, which has had a nice week. But like I said, to the lower band, around 652, I do think buyers will step in. You saw what they did today at 661. But I do think next week brings a little bit more bearishness. And then that's when you're going to be your chance and your time to step in. And that's pretty much it for SPY. Let's get into the big movers on the day here, because it's very interesting. And it's what I'm talking about in terms of rotation. Multiple standard deviation mover, XLE. I've been poo-pooing on energy for quite a while. The XLE, though, and you can see in the chart here, does not look atrocious. Okay, this is your Exxon Mobils, your Chevrons. These are the bigs. You do have a 200-day moving average that is sliding. It's been continuing to slide since, XLE peaked in terms of in the 52-week look back last Thanksgiving at $98. And the low came with the SPY 52-week lows back in early April at $74. And you see that 200-day moving average essentially being a brick wall here at $87. Energy really has done a nice job in trying to etch a recovery since October 22nd. That's a small sample size. And now you're actually at 59 RSI, which is the highest, in terms of enthusiasm. This is seen since September 26th. Here's the thing about energy. I think it's had a great run going off of these lows of $85. Even in terms of the chart, I would say about 90 is the ceiling for this. I think that's a little bit rich, the September 26 highs. And to me, this looks like it has about 2 weeks in the penalty box, probably going to about $8. I don't think this dance is done. Perhaps some bearishness over the macro next week takes the rug from underneath energy for a bit. Great looking candle today. It's two sides of a coin here, because they are rotating into other assets that have not gotten love. And this is one of the major, S&P out of the 11 sectors. But this is a growth, global growth type story. So just don't continue to love this chart here. That's really it for energy. They gobbled it up today. I think maybe it has a little bit more to go just because of the candle formation. But I think a ceiling of 90, and I do think this is still going to have a battle to wage here with the 87, 86 handle. So I personally wouldn't be chasing. If you have to get in the energy complex, XLE is looking better than USO. Of course, they're correlated. The actual crude oil per barrel versus the energy complex, of course, they dance together. But the energy companies are looking a lot better, much more constructive than actual oil. Hence why I sold those USO call spreads 2 days ago. I entered that position on Wednesday. So that's my call for energy. I think it's a little bit of chasing here, a little bit small upside. Like I said, maybe 30 cents upside and $3 downside. When you have that kind of risk reward, I'd rather be short than long. I will be talking about this also as well on Wednesday at the morning show with JC and Straza and those guys. So catch it. It's Wednesday at the open at 9:30 a.m. So that's energy. Up 1.4% on the day. Look at this. This is what I'm talking about in terms of rotation. Energy, dead money. You could see that by a flatlining 200-day moving average. The next thing here is staples. We were just mocking staples. This thing continuously hit 52-week lows once the bottom fell out this week. The low came yesterday at $75. These companies are getting no love. I'm talking about the Kimberly-Clarks, the Procter & Gambles. They are getting poo-pooed on, just like moving a battleship. It's not growth like NVIDIA and Tesla, and they just get less love. Also a little bit concerned with the consumer. As you can see here, never got truly oversold. It got very close, 29.2 4 days ago. And then you see that doji right here. They stepped in at $75. And here you are at 70, I'm rounding $77. The forecast here for staples, that's been getting absolutely creamed. I do think you're going to have a dead cat bounce over the next 2 weeks. I personally wouldn't chase it. But if my thesis is correct that SPY continues to give back sideways to down, then they probably will pour into defensives. And you saw that today. They're exiting spec, the winners, and going into some of the underperformers, more defensive, like staples. So I do think this is actually going to probably try to move towards $78 over the next 2 to 3 weeks. It's going to be sideways and zigzags, and probably crap out right around the 50 RSI, tops 55 RSI, and that'll be your signal. And again, amazing overhead here, 80.5. That does not look like it'll be reclaimed anytime soon. So again, this probably dead cat bounces to about $78, I will say, over the next 2 weeks. No immediate trade. I would probably rather just stick out. But if you need exposure, I suppose you could do an XLP call spread, but it's going to be like watching paint dry. That was up 1.5% today, and another one up another 1.5%. If you had to name the most three boring sectors, they were all up today, literally 1.5%. It's almost as if the algos bought them all together. And of course, there was a number this morning, I believe the PCE, and it had to do with higher rates. Today, looking at this, utilities up 1.4%. Utilities, a beautiful looking chart. We've said this back in October. There's definitely worse places you can be than utilities. I think this is gearing up here. It's been a little bit rocky since those highs. Utilities don't move, monstrously. They're not a super volatile group. They move, in accordance with yields, as we said. A lot of action in TLT and all along the curve in bonds, really. But we had a quick fall off from 93 to 88. That's somewhat of a sizable move for a low ATR average true range ETF like XLU. I do think this is setting up for the next 2 weeks. I think this wants to go to at least 90. That's 30 cents away. That's not really a bold call. But over the 2 weeks, I do think this wants to get to potential new, just inside of those highs. Again, those are all-time highs on the XLU. I think it gets very close. The handle I'm looking at is $93. This isn't horrible in terms of you need exposure, and obviously it's not Mag 7. Check the options on this because it might not even be worth to sell the upside due to the low vol. You could potentially just buy the 90 calls for December, see what they're worth. If this thing does go to 93 and the implied vol raises or increases, you're going to get paid handsomely. So XLU at one point this year was the absolute best performing sector. And we've gone gangbusters in tech and communications before Meta fell off. I do think it's going to hold in here. I love your risk reward if you get in with an 88, 89 handle. This thing looks destined to get to $92, $93. I'm glancing at the 90 calls, maybe the 91 calls December. If that suits your book, I don't think that's a bad position. All right, so those were the movers today higher. They gobbled up energy, consumer staples, and utilities, all to the exact same tune of 1.4% approximately. Losers, nil. So the market today, again, S&P was down, Qs were down 2%. At one point, IWM down 1.5%. It looked ugly. Volatility was up 7-8%. And at the end of the day, which is what we care about, what the actual final score is, the mark, no multiple standard deviation losers, screaming to me absolute digestion of gains. This is not bubble bursting behavior, except just literally taking gains out of your absolute big winners. Let's recap the week and let's see the top three gainers of the past 5 days. That would be this week. Number one, we were talking about this last week. It's natural gas up 5%. Natural gas has looked good. We've called out since the bottom here, October 16th at 11 double here at 11.50, and you see the rise it's had in the past 5 days. And that gas, not a massive mover, but it's up 5% over the past 5 days, or an average of 1% a day. Today, giving back some of those gains, down 1.5%. This was the leader this week in ETF land. Obviously, we were to the downside. S&P shed about 2%. NASDAQ had one of its worst weeks in quite a while. Nat gas was the winner here. Of course, it is a commodity. We called out here, I know it's going to seem cute, but October 20th, I said get ready for a dead cat bounce. That'll likely take you to 14 even. So that was here. I'm sorry, it was a little bit more after the it was after this gap up, after I had that big 9% day. I said it's not done yet. Look for it to get to a 14 handle from 13. That's not nothing. And that's exactly what's happened. We basically got to the high today was 14.17. Now what? I think the bottom doesn't absolutely fall out. This does look like it's stabilizing somewhat, although still a fall intraday moving average. I am impressed by the RSI. They really have been gobbling it up. But again, short sample size, just 7 days since it had those really impressive RSI marks since the day before Halloween. But this, I do not think is, I will tell you when it has a good 2-3 weeks, and I'll tell you when it has a bad 2-3 weeks. And I don't think this is going to have a great 2 to 3 weeks. Of course, it is correlated with XLE. If XLE starts to stabilize, this will get some love, as a lot of them are, natural gas companies as well. But I don't like this one for the next 2 weeks. I think this is headed to about $12 even, believe it or not. So first stop, it's got to visit 13 even, which I think it will. And then after that, the 52-week low is 11.55. I don't think that gets taken out, but I do think we go underneath those the lows from last week. I do think we pierce and we go to 12. These can move. Not really a huge fan of playing nat gas in terms of puts. You really need an IV, spike, but you can sell upside calls if you don't believe in it. Sell the 14 half or sell the 15 calls. I don't think it's going to generate you a ton. Or you can buy put spreads. Not really a huge fan. Like I said, I'm much more enthusiastic about my silver call spread and shorting, selling the USO call spread here. But yeah, for net gas, I guess put spreads are not an awful. You probably do the 13-12 put spread, maybe even a ratio. Those options are pretty cheap. Or you can just outright short UNJ. But nat gas, the best performing ETF this week. This is another reason why I know it's not going to be a durable trend. The number 2 best performer this week was volatility. Some fear did enter the market this week to the tune of 3.5%. VXX closed today down 0.5%. Look at the rejection today. Today, VXX, during that spike, we touched 37 even. They ended up closing it down. VWAP was 35.40. They closed it beneath that. So obviously inverse of what happened with SPY, the same statistics I gave you. The VXX did the inverse. We had said before, corroborating, when SPY is done its bearish distribution phase, I still think VXX has a little bit to go. So it's exactly the opposite. So if SPY has more bearishness to go for about a week or so, I don't think VXX is done. I want to see it pierce right around, to be honest with you, right around $39 even. And then that will, I had said previously 38. It's right around there. To me, right when it gets to 39, I think it'll be inside of those mid-October highs. That will be the resolution. Then you will know that it is the scare is over. And I do think it'll probably pierce that 39 somewhere towards the end of next week. And then you'll know to start getting long S&P. That probably inverse correlates with about 660 or so in SPY, equal levels. So those are the risk management levels I am checking for. And again, fear has not truly been in the market since mid-October. That 16th and 17th, after we had that massive, bearish engulfing in SPY, which is one of the best things that got out weak hands out of the market. We had a little bit more further scare on the 16th and 17th. After that, this thing can't even hold 53 RSI. So volatility is not exactly bid. But it has had the second best week after net gas. This is what I'm saying. The triggers this week were taking profits off the table. You'll see the double-digit percent losers versus these up 4, up 5% nonsense. Okay, and here's one. The number 3rd best performing ETF. This is actually something with upside. It's EWZ hitting a new 52-week high today. There you go, up 3% over the past 5 days, or obviously less than 1% a day. Nice looking candle today. That is a new 52-week high in EWZ. Don't love investing or trading in a sliding lower 200-day moving average. And that changed right end of August. Really, to simplify, once you had that breakout above 29 quarter, and it's interesting how it fell. So 29 quarter is a very important level. It's that breakout above those previous July highs. And then you finally got it at the end of August. It went all the way to 31. And then look where it fell. Basically 29 quarter, 29 even during that October 10th global scare. And then now, woof, all the way to 32. International has been really the way to go in many, in terms of alpha generation this year, has not just been the S&P. This one person I would not chase right here, similar to what we said about South Korea. Are we looking at South Korea today? We are, because it's on the year-over-year recap. I sounded crazy. I said, this country ETF is going to slide 8%. We'll take a look. It's down just about that. Charts are charts. They are the stories of finance, okay? And I could look at sugar, Bitcoin, Microsoft, Brazil. It's all the same. Here, I don't love chasing this here. This looks like it's going to have about 2 weeks or so in the penalty box, down to about 30.80. And then I do think that warrants investment. And then I do think this is I love that chart. As we zoom out, look at this in terms of the catch-up trade. Brazil peaked during the great financial crisis. EWZ was $102 or 3x from here. Can you imagine? Of course, oil was a different price back then, and everything else in Brazil is commodity heavy. But absolutely, overbought today. The great looking candle. They closed it at the highs. VWAP was 32.16, so they closed it 1% above that. Looks great. Short term, maybe it wants to get to 32.5 or so on Monday, but over the next 2 to 3 weeks, I think this is headed down to about 30.80. And then I think that's where it warrants, something like a 31-33 December call spread, depending on when it digests those gains. But I do think it'll give up the ghost sooner than not. A strong week for EWZ, up 3 1/3%. Let's look at the losers now, because this is what made a lot of people poo-poo their pants this week, almost comically. So the biggest loser this week, typed in the wrong ticker there. The worst performer this week was uranium, an absolute superstar up until mid-October. If you remember, this thing touched 60.5, and voila, what a drop, all the way to $44. But overall, a winner this year, especially since entering this overbought behavior starting right around around mid-May here, where it went on a Michael Jordan type run again for a month and a half. It took the stock from $27 to $39, and this is an ETF for uranium. I'm also looking at this one. I may do somewhat similar correlated play, actually, in terms of single stocks, but for uranium. So I'm seeing a W pattern here. I think it'll take time. It'll probably, so a couple things. It has to get above 57 to confirm. I don't love the lower, leg here, but buyers did step in and they closed it up 1.4%. But uranium's had a nasty week, down 14% over the past 5 days, or an average of nearly 3% a day. Is it over? We always talk about the compression of these candles, down 2%, down 4.5%, down 5%, up 60. Down 6, and then today up 2. That's a little bit too mixed for me, and it's under 50 RSI. I believe RIPs will be sold. Give this one a little bit of time to have the dust settle. If it starts to bottom at 45 even, today it touched 44.5. If it gets to 45 even, which is below, yes, the formation looks a little bit scary, but I'm giving it credit due to its velocity of the rising 200-day moving average. If you get an invitation to buy this at 45, somewhere near the end of the overall market bearish distribution, towards the middle, end of next week at $45, I do believe it will reward you. This thing looks destined to get to $51. You need, obviously, some of the Mag 7, the ARK complex, the AI trades, and the semis to really start to ramp up. And this should be participating as well. And my longer-term target is 59. So you can make a really nice dough there. So in terms of next week, if you do get that 45 entry, yeah, I mean, the 46.50 call spread for December would work as well. So that's uranium, the nastiest performing ETF this week. This is what they hammered this week, down 14%. Number two, down 11%. I'm looking very closely at this. I actually put it in order today. It did not get filled. I will very likely get in on Monday. I want to see how it trades over the weekend since it is crypto. It trades 24/7. Ethereum. Again, this is profit taking. This is not bubble bursting behavior. I do not like, however, that something stands out to me. The weakness here, very pronounced since October 8th. I don't like here that I got rejected on October 27th at 50 RSI. Don't love that. Lets me know as soon as the going got tough, they bailed on the name. And this was all the rage up until the end of August when this pierced $37 nearly. It held where it had to 3 days ago. You see the 200-day moving average. It is going up by basically half a penny a day. It's at 23.07. That's where your support is. It got very close 3 days ago. We got to 23.65, and here we are. But why we're talking about it today is the second worst performing ETF, down 11% over the past 5 days, and that is including a beautiful nearly 5% rally. The reason why I'm looking at it, I do think this got a little bit overdone. What gives me caution is I don't want to see it crap out at the 50 RSI, which mathematically is technically right here around $28.50 to $29. That being said, similar to what I said about the other assets we just mentioned, I want to give this a little bit of time to let the dust settle, kind of like uranium, and they're both growthy, AI correlated. And then, when the Qs have a nasty week, these are going to get frontline eviscerated. So right here, potentially $25 next week, and that's when I'll step in. I'm looking at the December 26.35 call spread. Very bullish. I know it's a $9 spread. It seems crazy. I may reduce the upside target, the short leg. I think to curb my enthusiasm just a little bit. I think it's more so closer to the 33 at this point. But you know how crypto moves. It can move, a month's worth in a day. So, but this does look heavy here that they kind of bailed at around $33. But yeah, so I'm looking at the December 26.33 call spread, and I'll very likely enter on Monday, depending on what the action looks like over the weekend. That's Ethereum, the second worst performer, been a superstar for most of the year. And number three, telling me that there's some profit taking as well, is, Kathy's Ark. 10% down week, okay, for an average of 2% a day. Today, down just a fraction of that, down 20 bips. Look at that beautiful candle. It touched $77 today, and they said, no, I don't think that's right. $77 is where Ark was entertaining prices as of July. So 4 months of gains, reversed and touched down here. You see the 200-day moving average at $67. Ark is a great fund. I think I'm looking at this as well, and I do anticipate entering, but I need the dust to settle for this as well. But I will get in. I think this has a little bit more volatility next week. It's a great looking candle. It makes me want to change my stance, but I just think there's still a little bit more volatility on this. Very impressive that it touched 77 handle, 80 VWAP, and it closed at 81. That's folks wanted to buy it. And it closed at the high of day, essentially, to close down 20 bips. So pretty impressive, very impressive, actually. Don't love the RSI, the weakest it's been since April, the week of the 52-week lows in the market and of this individual ETF. Let the dust settle a little bit. I personally love entries under 85. Looks strong to me. I'm not going to target that high, but if you get in at $80 next week on some kind of volatility, that's where I'll be targeting the spread. Not certain what I will do because I don't want to bleed theta. So I'm still looking for this to at least recapture that 50 RSI. That'll likely be at 85, maybe even 87. And then after that, my target is still 90, between 92 and 95. I need to see the enthusiasm really get to where it was in, earlier in October. It doesn't get back to that 92, 93 handle of the highs. That's what I'm looking at here. But will the rotation of energy, stables, and utilities take and eat some of the lunch away from ARK? Possibly, and that's what we're examining and looking in the coming days. And again, like I said, 40 RSI, pretty weak for this specific name, the stochastic momentum mix. Again, not having gone lower besides this period when it went underneath a rising 200 moving average with the 52-week lows back in April. So overall, get ready to pounce on this. I would say next week. And if you get in $80, I absolutely love it. Probably could do 82, 87 call spreads for end of November. I think these are very liquid in terms of the weeklies as well. So just some ideas. I personally will probably enter the week after, and like I said, let the dust settle. Those were the three losers. ARK was down 10% this week, or an average of 2% a day. Is it over? Really encouraging candle. We shall see. Also, just going back to that, this is kind of what I'm thinking. It looks like this candle from August 20th. Almost looks very identical. Look at if I did an overlay, look at this rally to that down move, and then a nice rally, and then it basically came close to eclipsing it, and then an advance. That's what I'm thinking here. So yeah, it probably does go higher, and the bottom may be in, but you have to expect that volatility will be a little bit unknown, and there's still companies reporting earnings in this ETF. All right. Top three trades of the, I almost said top three TARs. Top three trades of the past 52 weeks. Number one, this is important. Number one, GDX. Your number one gainer, and the alpha is really going to this group because number two is 30% back. Number one, GDX up 82%. I got in silver. I was looking very, very close at GDX. It was very close. I liked more of the short-term momentum of silver, which is why I did that with shorter-term, options. But GDX is your year-over-year leader. No better place to be. I know a couple people that entered it this week. Like I said, I chose silver instead. This one looks good. I don't love that the moving averages have slid since October 20th. We need that to recover. It has not been above 50 RSI since the 20th. So that's what I'm talking about here, which was 4 days removed from the 52-week highs. So want to see that. They've been selling it when it gets to the 50 RSI. All that being said, though, I think it'll hang in here right around the 73 mark. It's at 72.61. I think it'll get to 73. And then to be frank, I do have an $82 target on this for about 10 days from now, right around there. The highs are 85. I'm not so positive it takes that out. It's going to get very close, I believe. I do think it's imminent in a minute that this will overcome that 50 RSI and start to get its winning ways. So trades for that. Buy yourself a little bit of time. You should probably do the Decembers. Let this close above $73. So you buy into strength. This is day 4 off the low. You also have kind of a funky, messy W here. You can see the levels that it has a hard time contending with. 74 is that level. You can even wait for that, be a lazy trader, but really you're just buying into strength. You want to sell into weakness, and you want to buy into strength. You don't want to be the first one in the water. And yeah, like I said, so wait for it to close above 73. You could probably do the 74.81 call spread. December gets to 81. You get to that leg, you sell it, and you probably book at least I'm guessing a 100% gainer. So it's kind of what I'm angling with for SLV. They're correlated. As that moves, so will this. But GDX, why we're talking about it, your year-over-year leader up 82%. These big gainers sometimes have big mean reversions, so it could do nothing for a while. But I think that's not the case with this. And I think gold miners, and again, a lot of the names, Anglo Gold Ashanti, Numa, a lot of them have already reported. So you have those kinds of earnings catalyst risks to the upside or downside out of the way. And again, this is GDX, so homogenizes and flattens that risk. Your best ETF since last November, up 82%. That is whoa Nelly. Number 2, we just talked about it. It's Kathy's ARK, up 52%. So you're leaving some money on the table in terms of that difference. Like I just said, let the dust settle. I think GDX is setting up now. Let it get another positive close on Monday, and I think it's safe to enter that water for that precious yellow metal trade to get going again. ARK looks great. I'm not super convinced because the candle. If Monday's up 5%, then yeah, it's going to be at 86. Very very soon. But yeah, ARK is your number 2 leader year over year, up 52% year over year, or 1% a week each and every week. We're talking about it this week. It's down 10. That's what you want to see. You want to see your best player. I mean, you don't want to see your best player fumbling and having an awful game, but when you do, you know it's not going to happen again the next week. And the profile speaks for itself. ARK, number 2 best ETF. And this one we have not really included. It's really on the ranks now. It's actually on the heels of ARK. If ARK hadn't had that beautiful recovery today, this actually would be number 2. It is South Korea. We alluded to this in the opening segment. I think folks probably thought I was an insane person 4 days ago when it was at 101. And I said, look out, this thing's probably going to slip 9% for a national, for a geographical ETF. That's crazy. And look what happened. Charts are God in terms of finance. Look what happened. We touched 101, the low today, 90. And that is exactly basically a 10% reduction. Good looking candle. We're still at 54 RSI. Samsung comprises about, I believe, 20% of the ETF, and they've got their own, headlines as well, in terms of AI and phone numbers, et cetera, et cetera. But right here for EWI, let the dust settle for this a little bit. I'm very interested to see where it stops. Today, it was also down 1.8%. So you want to see the candles get a little bit, smaller. After I had that pronouncement, the next day it was down 5%. Then after that, they gobbled it up a little bit, up 90 bips, then down 3%. And then today, down 1.8%. Give this about another week or so in the penalty box. The absolute floor, in my opinion, is 85. If it gets to 85, that's $7 away. I'm not so sure it does all that. Probably more likely is 80, like this $88 mark, basically to not fill this gap from the October 16th gap up is what I'm targeting. A much better entry if it's possible would be closer to the 85. I'm not so sure you get it. That 85 is your 50-day moving average. They'd really have to sell it. And the 50 RSI tells me it's not likely. And the flows in terms of the end of day orders are still very strong in terms of where this has been closing outside of this week. I'm looking at a longer time frame. So this, has not really had a rough patch ever since before this breakout above 75. The breakout above 75 was amazing for South Korea. It took it to 100. And again, to talk about a geographical ETF in that nature, this isn't, like Pinterest moving 20%. That's crazy for an actual geographical ETF. I hope the Koreans are invested in South Korea. But that being said, as I said, the stochastic momentum mix here is in nosebleed territory. I don't think it can keep up. Give this about 5-7 days. And like I said, $80 will be a much better level of entry. Okay. We will see you on Monday.